Hello everyone, myself Vaibhav. The USDJPY is now finally consolidating and it has found the support around 104. And if you see its today's price action, we can see that it has on the lower time frame charts like 15 minutes, it has found good support and bounced twice from those levels. So we can more or less say that its relentless slide, which began closer to the 106, is now coming to an pause. And at least for a session or two, we can be fairly confident of looking for the scalping opportunities while looking at the 104 level as its near-term support. If we consider the data docket for the day, we had plenty of data releases and all throughout the day starting from the Asian trading session, we got major releases for the major economies of the world starting from the Japan, Australia and not to forget the multiple countries of the Euro area. So we here straight forward move to the Euro area GDP number. Prior to that, we also got the GDP growth rates for the France and Germany as well. But we will not really go into the details of the individual numbers. The euro area as a whole has grown by 12.7% in terms of quarter on quarter for the quarter ended September 2020. So these are robust numbers, but we have to keep in mind the fall, which was equally phenomenal in the second quarter on account of the coronavirus pandemic restriction. So this rebound is happening from a low base, and the year-on-year number shows the whole story where the growth rate is still in the negative and there is a decline of 4.3%. That is, the growth rate stands at minus 4.3%. We have to take these numbers accordingly. The CPI reading was also released and is the first estimate. And for the month of October, the year-on-year CPI is now in the negative territory, that is deflationary territory at minus 0.3. And in terms of month-on-month, there is slight increase, but not so much at 0.2%. And the unemployment rate stands at unchanged level of 8.3%. Moving on to the US PCE data, we got the PCE data for the United States, and here there is some increase, some improvement in the price performance in the US economy, and as a result of that, the PCE price index in terms of year on year have gone up by 1.4%, which is higher than the prior month's reading of 1.3%. So there is improvement in the month of September. Even in terms of month on month, the September growth rate stands at 0.2%. At the same time, we also got the personal spending numbers, and this personal spending has gone up by 1.4%, and this really helped to improve the market sentiments, and we saw immediate jump on the higher side on the risk assets, but those early effects are now tapping off as we are progressing in the US session. Just a while back, we also got the University of Michigan's economics survey data, and here one of the reading which stands out is the consumer sentiment, which has shown some improvement. Now, for the month of October, it has been revised higher to 81.8%, and it is indeed better than the prior month reading of 80.4. The inflation expectations stand where it was at 2.6%, and the current conditions have actually bit deteriorated, and that is expected given the rising coronavirus cases in the United States. So that's all for the data, and I think now this is being the Friday's trading session. We are almost through all these data releases, and more or less the price action is going to be dependent on how the things unfold in the latter hours of today's US trading session. So that would be the major driving factor, and I am not really expecting any big moves in today's session. Of course, still the sentiments are on the risk off sides. We are already seeing the Nasdaq falling closer to the yesterday's lows, but let's see how things will pan out as we wrap up the week. Now moving on to the technical segment, as I said, the USD/JPY is indeed showing some signs of consolidating above 104. So we will be looking at that if we have any emerging opportunity to get involved for any trade in the USD/JPY. And also we will see the emerging trading opportunities for the NZD/USD once we are done with the USD/JPY's technical outlook. So here this is the daily time frame chart, and for the USD/JPY the journey has been all downhill. But on three occasions, now this is the third occasion here, where it has found some buying momentum as it has approached these 104 levels. So you can say, technically speaking, the 104 has been a crucial price area for the USD JPY. And looking at its current price action, today's price action, where it has reversed almost all the earlier losses and now it is even climbing higher to the day's highs, goes on to show the importance of these price zone. And I think we should indeed be looking at the buying trades on the lower side if we are fortunate enough to get the trade position closer to the 104 zone. On the higher side, the formation is still bearish. We have this formation of lower highs, but I am targeting this immediate support zone. So we are looking at that from the short term perspective. From the long to medium term perspective, the sentiments are still pretty much on the bear side. So if we want to figure out the immediate support, I think we can utilize this first support of this month's pivot point series, where we have seen the USDJPY rebounding multiple times here in today's session. This is the third occasion where the USDJPY has shown sharp reversal after getting close to the 104 zone, and now it has even climbed above the 104.5, and it's looking like that it is going to target the higher side, the yesterday's swing high, and it might even go on to cross this immediate swing high in the near term, given the backdrop of this today's low being higher than the prior swing low. That means we have the formation on the short term time frames, shorter time frames of higher lows, and as a result of that we can even expect the higher high to form in due course of time. So if we want to target the buy trade for the USD/JPY, I think this 50 SMA area can be of crucial importance for us. We are really seeing this effort, this willingness on part of the buyers in the USD/JPY to push the USD/JPY closer to its immediate swing high. And also on the higher side, we have this resistance coming into play around 104.7, as we have the downward sloping 200 SMA. So taken together, we can expect this resistance zone to exert the downward pressure in the USD/JPY. But as long as we are seeing the USD/JPY holding well and trading above this immediate support zone, I think we can be fairly confident of going in for the fresh long trade. And as I said, we can continue to target for the fresh buying opportunities anywhere in the price band of 104.3 to 104.4, closer to this 50 SMA zone. Right now, the price is closer to the 100 SMA zone, but as I said, we also have to keep in mind the possible stop loss in case we happen to be wrong. And of course, we will have to keep the stop loss below the prior swing low. So we will be keeping at the we will be looking at the price zone below the 104, which will be utilized as our near term stop loss. So for a risk of around 30 to 40 pips, we can expect the prior swing high, even 105 should be reached in due course of time, and that is going to give us the risk reward ratio of 1 is to 2 also. Now let's see how things are shaping up for the NZD/USD's technical outlook. This is the NZD/USD's daily time frame chart, and the NZD/USD has been in the consolidation phase with the underlying bias being bullish after making low closer to the 0.65 level. It then went on to form this channel where we saw the formation of higher highs and higher lows, and even in yesterday's session we saw it finding good buying support closer to the 0.66, and from those levels it has rebounded almost 1 percentage point, but it is not really out of the bushes, and we still have the chance to target it for the short sell trades. And given this magnitude of the fall, I am pretty much expecting the NZD/USD to break on the lower side in due course of time, and eventually it might even get closer to the immediate swing low, and this immediate swing low is not likely to provide big support, and we can expect the price to even drop below the 0.65 in next few trading sessions. So if that is the possibility, I think we will have to utilize this pivot point formation which is there for us to help us as the immediate guide for deciding whether to go short or whether to go long or whether to simply sit on the sidelines. And looking at its formation, we indeed have to be careful here, as today is the Friday's trading session, as I would like to remind, and we don't really have much time left in today's session. And as you can see, the price action is still in the bullish territory as per the pivot point formation, as the price action is above the central pivot point which is there around 0.6643, so we have to be careful also. And the regression curve is still pointing upwards, still pointing on the bullish trajectory. Of course the price has now moved in the lower band of this regression curve, and that is going to flatten this regression curve in next couple of sessions. But as of now, I would say that we will have to wait for the Monday, and on the Monday we will have a lot more clarity. We will have the new formation for the pivot point series as well, and utilizing that central pivot point, we can be in a position to decide whether to go on the offensive or whether to simply stay on the defensive and sit on the sidelines. So if we want the trade, I think we will have to look at the prior swing lows, which are likely to provide the immediate resistance zone for the NZD/USD. And here the death cross is in place. We have 50 SMA crossing below the 200 SMA, and 100 SMA is also following through. We are already seeing the NZD/USD's 100 SMA proving a tough resistance to crack, and also we have this line formation by simply joining the prior swing lows, and then it is going horizontal, and it is likely to act as the near term resistance for the NZD/USD's price action. So all these factors taken together, I think, point to the cautious undertone which we need to adapt while trading in the NZD/USD. As I said, the market momentum is still on the bearish side, but I think it will be better for us to wait for the Monday's session open, and after looking at the formation on the price action for first couple of hours after the start of the trading in New Zealand, we can be confident about going in for the fresh position. And I would recommend that it is going to be prudent to continue to look for the short sale trade in the NZD/USD while keeping the stop losses just a little above, enough to cover our losses in case we happen to be wrong. I think the stop loss closer to 0.67 should do the job in case we are going in for the short sale anywhere in the price band of 0.6670 to 0.6680. So you should be targeting these prior swing low area, and now it is acting as the near term resistance. So we have this opportunity emerging for us, but of course we will have to wait here. Right now is not the time to go for the fresh trades, as that is going to increase the risk for us in case we happen to be wrong. And on the lower side, we can expect the break to happen below this prior swing low around 0.6600, that is 0.66. So here we have the risk reward ratio, which is going to be better than 1 is to 2, as our entry is going to be anywhere in the price band of 0.6670 to 0.6680, and the target is going to be in the range of 0.66, whereas the stop loss is around 0.67. So that is going to give us the risk reward ratio, which is also going to be favorable at 1 is to 2. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I will be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. Goodbye.